Let's get to our calls of the day. We're going to start with Uber since we were sort of in that space before, talking Waymo, Tesla. Let's talk about Uber. Obviously, a number of business lines there, but the target was raised to $115 from $95 and reiterated overweight at Morgan Stanley. They see the path forward for ride sharing and the Eats booking growth. Joe, I'm going to start with you. You own this one.
I believe they report on August 6th. It's going to be an important report to understand if the strength of the balance sheet continues, and that's what I've been focused on. This company several years ago made a remarkable turn in their financial conditions. Free cash flow generation went positive. It's accelerated from there, and it's allowed them to do the things that they need to do in terms of diversifying the business model. Not all about mobility, going to other areas like delivery, obviously including AI in the story, and ultimately having partnerships like they do in Atlanta with Waymo. So the company has technically very strong momentum. It continues to hug all the major supportive technical moving average lines. It looks like it wants to make that run ultimately at 100. I'm not so sure it's going to do it ahead of earnings, but post earnings, if you hear what you need to hear, I do think above 100 is a price target that would be not so much the ceiling, but will ultimately become the floor. You could be talking about support at that level. Yeah, I mean, it's right. It's above 90 right now. Can it get to 115 in the short run?
Look, I think Joe is spot on. Cash flow was what this company needed. They produced that. They got growth in there. They simplified their businesses. They got out of a lot of the other businesses. Now the question is growth. And can they grow? What I like about this stock also, it's not just domestic, it's international. So they have that flavor as well. And I think, again, I'm going to go back to the halo effect that Tesla does when they do their own self-driving cars and the taxis. If Uber gets a piece of this business, that adds to that as well, because they're also the brand that people know. Right. So if you're going to go and you're going to go to be a loyal Uber subscriber, and they've done very well with that too, I think. But again, this is a growth stock. This is now a momentum stock. It used to be a deep value stock in the 20s and 30s when nobody wanted to touch it, et cetera. And now it's got the momentum behind it, so it has to show execution. Self-driving. I'm just not on board. I mean, I just don't get it. Freaks me out. But anyway, let's move on to QXO. This initiated outperform with a $33 target RBC. I mean, Joe, they had I'm sorry, is it Joe's Weiss, though, of this one? Had a lot of good things to say here at RBC, building products distribution. They really like this, and the healthy capital structure, attractive currency, cost of capital. What do you think?
Well, first of all, if you look at a chart, you're going to see the stock is down 80% year to date. So ignore the chart. That's before Brad Jacobs got involved. When Brad Jacobs got involved, he priced the pipe at $9.14. So that's really where the stock, for this generation of the stock, should be judged. Look, Brad founded United Rentals. If you owned it from when he founded to now, that's a ridiculous return your capital, right? Over 100 times. GXO Logistics having some tough times now, but that's been doing quite well. That was spun out of XPO Logistics, so the value created there, and RXO. So look, he's definitely a wealth creator, a sizable wealth creator, in addition to the private companies that he had and the waste management company that he started, which he sold for a major major gain as well. So this is a consolidation vehicle. His playbook is the same here as it's been with all those other companies. Find industries that are grossly inefficient, that have lagged in putting technology into their operations, and then consolidate those that are lagging and let the synergies take you higher. And that's what's happening. So I bought Beacon Roofing, tried to buy another large company, but stayed very disciplined on price. If you've met Brad, he's when I go to have lunch at his office, they order lunch from me, and he brings a Tupperware container with lunch from home. So he's frugal, but spends where you'll get a great return, and that's what QXO is going to be. So this is going to be a company that's going to have $10 billion in sales over the next decade or so. So it's a permanent compounder. So you just want to stay with it.
I need your help keeping track of all those acronyms with the XOs, hugs and kisses.
They're all listed.
So we don't own this one, but we own XPO, RXO, and GXO, and we're big Brad Jacobs fans. We just haven't gotten into this one yet, just because we don't really know exactly where it's going. But we've owned his stocks for a long time, and if you've been a long-term investor with him, now the stocks do get volatile. as we know. But
that's where you make some money.
But he has created so much value for shareholders over time.
Very interesting one.